So good day, very warm welcome, sir, at the Ibpc studio series, where we are going to initiate today. In fact, we have already inaugurated in morning with the good hands and the gracious presence of your good self and Mr. Siddhartha Balachandran today, the Capital Connect series between UAE and India. It's a pleasure, it's a pride, and it's an opportunity, of course, when we will like to understand that how Bombay Stock Exchange, or let's say BSE, is going to collaborate with Dubai financial market. So what is your opinion, strategies, goals? Over to you, sir.
Thank you so much, first of all, having me in this studio and finding me worthwhile to start this series along with you. Dubai has been growing in a significantly fast way, with a lot of opportunities being provided. A significantly large number of Indians have benefited by being stationed in Dubai and trading in global and international markets. Some of the principles and practices adopted by the Dubai markets are worthy of learning by anybody and emulating, because they have been very growth oriented. This is from the Dubai side, but when we look at the India side, India is one of the fastest growing economy with a very clear ambition to become a developed nation in the coming years by 2047, what we call as Viksit Bharat. India being a very youthful country at this point of time, with a good amount of consumption capabilities and also intellectual capital, apart from the vigor and what should I say, the confidence to move ahead with all the policy formulations being done in that area and regulations being made very friendly, has lot to link together with Dubai and achieve a lot of things for both the nations. Both can learn from each other. From Dubai, there could be much better and easier access for the Indian markets, which we can work out and we should work out. And the principles and policies and procedures which Dubai has brought in to develop into a very good international financial center, some of them should be studied, understood and emulated in India. These could be some of the areas where there can be a great collaboration.
Thank you so much, sir, for appreciating the Dubai efforts, and of course with pride, the way India is taking the leadership is going ahead, and BSE as such paving the path for Viksit Bharat. As we understand and we have marked that since you joined, you took the leadership on BSE, the derivatives has been one of the very specific and goal-oriented objective with your good hands. And we are eager to know that being the foreign portfolio investors and D33 is one side, other side the India's investment and 5 trillion has already in the capitalization part from BSE is already surpassed in last year. How the derivative market you see and the opportunities for the foreign investors and your upcoming strategies in that regard?
It's a very good question that you are asking. When we look at foreign investors, particularly their activities in derivatives, there are people who specialize in taking a view much ahead in future, say a 3-month view or a 6 months view, and for that purpose they hedge their portfolios with the derivatives. For them, longer dated contracts are very important so that they'll be able to clearly hedge their long-term portfolio efforts in India. That is one set of participants. The second set of participants, we call them typically as quants. They use mathematics and they clearly understand the correlation between multiple factors, and they clearly devise strategies based on those skills to trade in markets. They are not the people necessarily who generate huge amount of order flow, may not trade too many trades, but clearly mathematics drive them to trade and take calculated trading strategies. That's the second set of participants. The third set of participants are high frequency traders. They do not maintain open positions. The minor aberrations that happen in the market in terms of price formulation during the course of the day, as there are multiple participants, that's what they try to enter in and bring an equilibrium to the market. Necessarily, therefore, they generate more orders and more trades, but not open position. For a market to cater to FPI, it should cater to all the needs of all these three people. The needs could be different, but an underlying thing is how robust is our technology, how much is our effort to deepen and broaden the market. For people, particularly in the first and second category, a deep and broad market is very essential. Therefore, our efforts have been in bringing in more and more participants, more and more FPIs, more and more high frequency traders, so that the equilibrium gets built. And when you do that, you have to necessarily ensure people trade not only necessarily in this week's contract, next week's contract, next to next week, next month. Otherwise, there is no depth in the market. We are working on those two areas as well. Apart from that, technology is a very important requirement. Unless and until we provide enough technology to take care of the load factor, we will not be able to take care of the requirements of FPI. All these three is what we are currently doing.
Certainly, sir. I will come back on the technology part because it's very interesting. Before that, I would like to thank Mr. Siddharth Balachandran for initiating that Capital Connect series today. Siddharth ji, we are talking long term, we are talking the vision, we are talking 2033 or 2047. But what is present? What is the trend of 2025? From your eyes, you are a stalwart in investments. So, how do you see 2025 precisely?
Thank you, Sahitya. Pleasure to have you here, Mr. Ramurthy. I'm not a stalwart. I'm barely an informed investor. But I try to be. Having said that, I think one thing which probably has worked for me is that I have a very strong philosophy. My investment philosophy is something that has been formulated through trials of fire many, many years back. And that, I think every adversity has sort of molded that. And my philosophy is very simply put, pursuit of permanence. So when you have a world that is so volatile, so full of turmoil, the opposite of that sense of being ephemeral is you search for permanence. Now, what can exhibit that sense of permanence is my next question. And I start putting ideals into that manifest my ideal investment destination first. What reflects permanence? I think one of the most profound ideals that reflect permanence is democracy. I don't think there is any other ruling style or government style that matches the sustainability of democracy. So I go for only a nation that exhibits these ideals. After democracy and after I have established my macroeconomic ideals, I look at the country, in the country, what are the institutions that reflect these ideals? So India is, I think, the greatest democracy. Other people may disagree, but I'm entitled to my view. Now, what reflects India holistically? What is that firm that reflects India? My first analysis led me to BSE and National Stock Exchange. And then my efforts were spent in sort of ironing out the finer details, the nuances, picking up little by little. It took me 3 to 4 years to build up the stake that I have, and painstaking years. Capital is easily said, but rarely got. Now, my effort in 2025, which I've already started, is to identify that same sense of permanence in other sectors of India. And I believe that banks and financial institutions are the next sector that I would like to be associated with. And I don't invest in companies, I associate with excellence. So companies that exhibit excellence, I associate with them. So it is never a return on investment that I look at. I am happy, I am proud to merely be associated with a BSE, to be associated with a National Stock Exchange. Similarly, I have started my association with State Bank of India and Life Insurance Corporation. These are two institutions that, again, I believe, mirror India. So India is my motivator. India is my identity provider. India, I'm so proud to say, has become my bread and butter. So this is my thesis.
Excellent and amazing way of portraying India and the Indian capital markets, and not just as an investor or the money maker, but an association. And that's the real Indian flavor, what we can smell it here and taste it here. But same time, one question comes, Mr. Siddharth, that you spoke about the permanence, but how do you balance the risk and volatility? As you are talking banking and finance, and which is full of volatility and full of every day there are the capital gearing ratios are changing, and the forex is taking a change in the PIP is making a big change in the market. So how do you balance that volatility? And
so again, the proof is in the pudding. I think my association with the existing mirrors of my country of origin and my country of identity. To give you a taste, and if you will permit me to use numbers, I rarely do this. I just want to get that sense across. My association with BSE started in 2009 or 2010 with a very, very small, whatever I could manage at that time. It was unlisted at that time. And if I think it was 1 crore Indian rupees that I had for 50,000 shares at 200. But this was before the face value was. I just did a basic calculation. At that time, that 1 crore today is 95 crore.
wow.
What more can I say? What more manifestation do I need to explain this? So, volatility is for the temporary. Wealth is for the permanent. So, as long as you have a view that lasts 16 years going forward, I mean already to 16 years, God will give me the staying power of many, many more years. Now, if 16 years has resulted in 7,500 to 8,000%, in between, if it goes down to 1,000%, will I be worried? And in any case, I am not motivated by the returns. I am motivated by the association, by the thought, the emotion behind it, which people say is bad for investment. But the emotion without attachment is the process that I follow. So to answer your question, which is a very, very valid question, and I'm not brushing the importance of that question, because people look at returns on an annual basis. I totally disagree. I look at returns on a 2-decade basis. So that is my my sort of medicine for that malaise.
Wow. First of all, honors to you having that type of the thought process, and definitely we will like to tell our investors, our members of Indian Business and Professional Council, let's not be worried with the volatility, the uncertainties running around globally as of now in the present situation, but the long path is there, and when BSE is gearing up with the technology and artificial intelligence, and that's one of the 3 core areas as Mr. Ramurthy just mentioned. So I come back to you, Mr. Ramurthy. Will you highlight few strategies or initiatives? How are you integrating artificial intelligence to give better experience and to get rid of this volatility or the emotion factor attached to the graphs and the risk indicators?
See, the volatility can never be gotten rid of because it is part of life. Volatility in a way is movement. If there is no movement, we will not call something as alive. Excessive volatility arising out of controllable and non-controllable factors when we look at it. Controllable factors could be because of lack of information uniformly available that we are already addressing. Whereas uncontrollable volatility arising out of global phenomena, they cannot be avoided. They will continue to exist. No technology can help. You may provide a volatility based product if at all you can for people to trade during those times, but those type of products do not become liquid so easily. Coming back to the AI part of it, we are very eagerly looking at the use of AI in multiple areas. One area we have started using it in a sort of what should I say, as a test pilot basis. We do look at a lot of DRHPs that we receive from small and medium enterprises. Those small and medium enterprises DRHPs are very voluminous, and you need to look at it thoroughly because SMEs carry some additional risk compared to a large cap company in terms of investors. The responsibility to some extent lies with the stock exchange as well, though the merchant bankers take a lot of responsibilities. There are SEBI checklists, there are BSE checklists. Apart from that, there are additional BSE checking points. Apart from that, there could be proper names in the prospectus which may have good news or adverse news in the public domain. The LLM and AI combined is able to look at them, and it is able to throw out our checklists and also the public domain available info checking, giving adverse and positive factors in almost 30 to 40 minutes. It's around 80 to 85% perfect. Remaining 15% it doesn't catch because AI also develops over a period of time. So this is one area we have started. We have some automation thought processes going on in BSE in multiple departments and areas, mainly to make BSE very strong and robust in terms of compliance and governance. So we will be planning to use them there as well once we are much more satisfied with our pilot project.
Absolutely, sir. Thank you so much for sharing that information and connecting with the compliances. Yes, it is required. But simultaneously, as the digital platforms are evolving and the fintech are coming in picture, what BSE is adapting to attract younger investors? Will you highlight on that, please?
We have to be very clear that an younger investor typically will have smaller amounts to invest and should not end up with a bad experience which will prevent him from coming forever into the market. So it is very important for people, particularly younger people, to understand what they trade and trade only what they understand. So how do we help them? We do conduct a lot of investor seminars. We put a lot of AV material in public domain, and also I have at least made it a point to visit as many colleges and as many universities possible, address the students there as to how they should do responsible investing. If a person has slightly more amount at disposal and is capable of doing some amount of equity research or understanding equity research, single stocks after due research are the good point for him. If he is in a very starting initial stages of investment journey, for him it will be better that if he goes towards mutual funds which are large cap. So this is the way we are developing the younger investors.
Thank you so much, sir, for highlighting that and giving that money mantras today and awareness, the camps with the colleges and the universities. Siddhartha ji, one last question, if you allow me, that what will be your advice for the new investors?
Read as much as you can. I don't think enough reading is being done. And I would like the emerging investor, I won't call them younger investor because you have new investors in every age group. I would like the emerging investor, as Mr. Ramamurthy just mentioned, to be aware of what exactly investing is. Investing does not mean only return oriented. Investing means investing transcends numericals. Investing is not trading. There is a difference between a trader and an investor. An investor stands the test of time. So, for you to be classified as an investor, I believe that you should, number one, spend time, thought, develop your unique investment philosophy. Do not copy anybody.
Excellent. So not to copy anybody, that is the message, and the knowledge is the ultimate. The read and analyze, as the seminars what we have been listening since morning today from you, Mr. Ramurthy. Really, it has been very thought-provoking, and I don't have the words because in a sentence I cannot complete my admiring praises to you and Mr. Siddharth. Congratulations again to initiate this fantastic Capital Connect series between UAE and India. Thank you very much.
Thank you, sir.
WeTel Television, we are telling live.